Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I want to get back to the methodology in action, which includes the mystery charts and my next 100 trades. That'll make sense in just 1 second. And some updates on some things we've talked about recently as far as the methodology is concerned. By the way, housekeeping, I do take requests. It makes my job a lot easier. I don't have to come in on a Monday morning and think about what I want to cover during the week. I can just cover whatever you want me to. I'll be happy to do that. If I can't fit it into this show, I do a show every Thursday night. You can find that at davelandry.com/webinar. It's called Dave Landry's The Week in Charts. Register once and you're good for all shows. It's most Thursdays, but sometimes it's a holiday week or God forbid somebody die like this week. Laugh to keep from crying, right? I'll do a show. But this week there is no show, and that would be on the 4th, if memory serves, I think. But no show this week. But usually Thursday nights, and the show's kind of open-ended, so I can cover a lot more there. If you need to reach me, davelandry.com/contact. Here's my Twitter handle right here. And if you want the slides from this presentation and all the other presentations, go to davelandry.com/StockCharts. I'll also give you a bunch of stuff to keep you busy for a long time. So let's talk about the mystery charts and the methodology in action. As you know or may know, I have been talking about my next 100 trades. Somebody on social media called me out because I was cherry picking stocks for this presentation. And what I'm doing is I'm just trying to show you how the methodology works. And then every now and then I'll show a losing trade, but there's not a whole lot to learn from losing trade other than honor your stop. So anyway, I said, well, what if I showed you my next 100 trades? And these are going to have zero hindsight, so it's going to be a mystery chart, which comes from the trading service, or it comes from the Facebook post to Dave Landry's Trend Traders. If you're a member of the trading service, you have access to that group and obviously access to the trading service. If you're a gold member of my website, you have at least access to my Facebook group. So I want to make sure there's zero hindsight in all of this, warts and all. And you're going to see so far it's been mostly warts, and we'll get to that in just a minute. And what I'm showing is a representative sample. So if you see me win on a trade, I may have taken that across multiple accounts. I'm probably going to normalize everything to 100K, and that's pretty much where we are right now. And then, so I might have, let's say I have one account, I take a trade, I might take it in multiple other accounts. So if you see me win, means I'm winning across multiple accounts. If you see me lose, I might be losing across multiple accounts. But I'm just going to show you a representative sample. And usually that's going to be 100K on a hypothetical 100K account. But I'm actually taking the trades, and I will actually show the trades. The reason I say hypothetical is the service is based on a hypothetical 100 account. But I do actually take those trades. Anyway, hopefully that made sense. You can always email me if it didn't. So this was AR. This was a setup not too long ago as a short. It's also a form of mystery chart if you go in and watch from a couple of weeks back. Anyway, you could see it triggered an entry, and I looked like I was pretty smart, and I felt pretty smart, and my brokerage account was getting bigger on this one, but unfortunately it rallied up and hit the stop. Now we did lower that stop a little bit, so at least on a mechanical basis it wasn't a full loss. And as far as a full loss, what I mean by that is, let's say we're trading 100K. Well, we'll risk 2% on any position, or each and every position, I should say. So 2% on 100K is $2,000. So let me clarify that or repeat that. If you got a 100K account, you're risking 2%. 2% times 100K, that's $2,000 at risk if stopped out. So in this case, because we lowered the stop a little bit, we lost a little bit less than 2%, at least on a mechanical basis. So here's the loss down here. You can see 686 plus 686. Now I divide those trades into two loaves. So one loaf is the trending loaf, and one is the swing trade loaf. So if we are able to get a swing trade out, our stop is moved to break even. And I'll walk you through a longer term example of that in just a few minutes. And then we have a free ride, so to speak, or free rolling, so to speak, and we'll ride out that trend as long as possible. Now, the mechanical results I just showed 1 second ago, you would have lost a little bit less than what I've actually lost here. In fact, you'd have lost right here, 686 and 686. You'd have lost $1,372. Now, you'll notice I lost a little bit more than that, a little bit less than the $2,000 that I had at risk initially, but a little bit more than I intended to lose based on the stop. Now, what happened, Dave? Did you not follow your plan? Well, I'm glad you asked. What I did was I applied a little bit of discretion. It looked like it was kind of stalling out, so I let it go a little bit further than the stop, and I was able to hang on a couple of 2 or 3 more days, and then unfortunately the stock did not implode, so I ended up losing more money than I intended. Now, you'll notice in here I kind of snuck in just a little small little day trade on some puts, and you can see I doubled my money pretty quickly on that. And overall, I think I ended up making only about $100, if that much. And I'm not telling you this to brag. It's just something I just picked up a little bit of money. I just thought it was a worthwhile trade. So that happened in between the going long and stopping out. But anyway, so I'm not counting that as part of my trades because that was not announced. That was just kind of like an S&G thing that I did. Now, we had another setup, which was a former mystery chart, GGR. Entry of 7, stop of 570, IPT of 830, and the risk was $1.30. Now, we're risking $1.30. Okay, that's on the chart, or that's the point risk, however you want to look at it. But we're actually going to buy 100,000 times 2%, which is $2,000, okay? And we're going to divide that by 1.30. If you go to the aforementioned link, davelandry.com/StockCharts, I'll give you a copy of this tracking sheet, and you can track your own trades in it. Anyway, entry was here, stop was down here, initial profit target up here somewhere. Let's see what happened. Oh, wait a minute. Well, that one failed miserably too. Well, that's a bit of a bummer. So, you might ask, how am I doing with these next 100 trades? So far, not so good. Let's take a look at that spreadsheet. So you can see, if we add everything up, including these last 2 losses, we're at 3,196, and that's negative. Now, you see some of these earlier trades were ogre trades and intraday trades. What I'm doing now, and I'll explain to you why in just one second, but what I'm doing now is I'm going to focus mostly on the core trend trades, and then you might occasionally see an IPO in here. So far, a loss of $3,196. Now, I did early on have a trade I missed, but this is not going to be about shoulda, coulda, woulda. This is going to be about real trades. And the reason I bring that up is not to be like, oh, the one that got away and shoulda, coulda, woulda, but more as a lesson in paying attention. And if memory serves, at that time, in fact, I want to actually do some pieces on this, and at one point I think I did on my website, davelandry.com. I wanted to talk about, there's a dog holding a bone, and he sees like a bigger bone in the water. And I think that's the siren call of some of this intraday trading that I do. And I missed an IPO that would have paid off really nicely. And I think if memory serves, I would have made over $3,000 on the trade. But I can't count that obviously because I didn't take the trade. So not looking too good here. So here's the deal. When I started this is what I was hoping for. I know I just said hope, a word you should never use in this business. But I was hoping for a stock like ARLP, which we are currently long, and I think this is a former mystery chart. Our entry was here, and if we take a look at the longer term chart, entry was here, stop was down here. Initial profit target was right here where we took off half of the shares. Now on a 100K account, this was 1% risk, so we do all that math, and that puts us at 2,000 shares in this particular case. And then this is what the trailing stop looked like somewhat. It's not perfect, but kind of looks a little bit like that. I let it widen out over time as I preach. And you could do that what I call naturally, and that means just let it open up. You're not moving it away from price. You only move it toward price. But you could do 2 things. As I've said before, let's say you're blessed, the stock goes up 3 points in one day. well, you might only move that stop up 2 points, okay? So you're gaining ground, so to speak. You gain an extra point in that stop, okay? And let's say that over a period of several days, the stock might go up a few cents each day, maybe 10 cents one day, 20 cents another. I call that keep the change. And over those days, until it starts going up significantly, it starts hitting new marginal highs significantly from where you got in at least, you just leave the stop where it is, and then that stop sort of gradually loosens up over time. Now, the reason I let that stop loosen up is, let's say you're like, okay, I want to come in, I want to hold a stock for a year, a stock like this, super volatile. I don't have the HV on here, which is known as Landry volatility in ACP. I didn't invent volatility, but they called it that because I told them I needed it for my research and analysis. Anyway, if you were to say, okay, I want to get in here, I want to try to hold for a year, you would have to use a ridiculously wide stop. Also, if you're trading longer term and trying to catch longer term trends, you're only going to be right about 27% of the time. Now, don't quote me on that, but that's about right. And I've done a lot of mechanical testing in the past, and that pretty much holds true. So you read about somebody like the Turtles or whatever, they were in the right place at the right time. And then also with the, not to take anything away from them, but you might want to look and see who's still around from that bunch. And the other thing too is your drawdowns are going to be abysmal. Whereas, not to jinx myself, but what I'm doing is I'm only risking a swing trade amount, okay? And if I get stopped out, I get stopped out. But I'm willing to let that stop loosen over time. So it's a hybrid approach to money management. So this is what I was hoping for, okay, when I started this whole project. And again, we trail that stop higher. Now, if you take a look at the trade on the first loaf, we got in way down at $4.94 a share. I think the mechanical entry, I got in a little late on this one, but the mechanical entry was a little bit closer to $4.79. Anyway, you multiply that out times 1,300 shares because 2,600 shares were put on and 1,300 shares were taken off of the trade. And that's 1,028. Now, I don't remember why I did this. Maybe I felt like my risks were too high on this particular trade. So if you were tracking this on 100K, then you would only have those 2,000 shares. But I ended up with 2,600 shares for whatever reason. This is a bigger account too. That's probably what it was. I decided to take some more profits off. And you can see right here, it's 77-cent profit on that, 300 shares. And that comes to $231. And to my surprise, I found these like like a year later. It's kind of embarrassing to say, but it's a good thing. These were dividends that were paid on this stock. And usually I'm trading such wild and crazy momentum stocks that I never get a dividend. And if I do, it's a couple of cents and it's not even worth bothering with, right? And then to my surprise, they announced another dividend, which I should get in a couple of days on these 1,000 shares, which will give me another $400. So if you add up all that, you come to $26.59 that has been taken off the table between dividends and partial profits. And then if you look at the open profits, there's another 18K in open profits. Now I have a little bit less than that because we got in slightly higher, but it's not much different. And I just realized that as I'm recording this. But anyway, so right around 20,000 and change. I'm probably right around 20,400 or so on this particular trade. So that's what I was looking for. And normalized for a 100K account, around 20K. And I'll have some trades that I will show you here when it does eventually stop out. And so if you had on 2,000 shares and you flipped out half, you'd still have roughly about 18K in open profits and about $2,000 in profits taken off. So you add all that up, around 20K or so. That's a 20% move on a 100K account. So that's what I was hoping for. Now, Sunday night, I think it was Sunday night, I'm laying in bed can't fall asleep. And I got to thinking, boy, did I make a mistake or bite off more than I could chew by showing my next 100 trades? And when is that big winner going to come along? And it's like, I don't know. And that's the part that could be a little scary. And I got to thinking, I said, Dave, you know what? Even if it is a little scary, or even if things don't work out, as you said, just show everything, warts and all. And I think longer term, I feel confident enough to catch those big winners, as I've told my people in my Facebook group quite often. In my Week of Charts webinar, it's like I'll go through a drawdown, and my wife's like, "What's wrong?" I wear my feelings on my sleeves. I'm like, "Well, babe, I'm losing money. I'm in a drawdown." She's like, "When are you gonna come out of it?" I'm like, "Well, I don't know. I don't know about the rest of you guys, but my wife has some really tough questions, and I imagine if you're married, you're answering a lot of questions too." I saw Seinfeld once do a little skit where he pretends to be behind a little podium or whatever and answering questions from his wife. So here's one thing that happened actually as I was getting ready to record this presentation. Now, just real quick, I have to be careful that I'm being prudent and not just trying to win to show you that I did well. And I think I was being prudent, and I'll flesh that out a little bit. So there's the trades down there, as you can see on Riot. This was a buy not that long ago. If you want to see all of these ahead of time, such as you see up here, not ahead of time, I'm sorry. If you want to see them, well, if you want to see them ahead of time, you have to pay me. You have to become a member of my trading service. But if you want to take a look at the archives, those are free. DaveLandry.com/archives. And if you know me a little bit, I like for you to get to know me first and understand the methodology before you start actually trading it. And that's because I see a lot of people, they'll come in and, as you just saw, we just had a few losers. They come in and they're gone, right? And then what happens the day after they lose? We end up with a huge winner. Not all the time, but enough to make it all worthwhile. And that ARLP, I'm sure if you went back in time and looked at the portfolio on those days, you'll see that right before we got into that, we probably had a bit of a drawdown. And I guarantee you a lot of people quit right before that big move. And that's just what trend following is, okay? It could be streaky at times. I was told not to use the word streaky, but it can be streaky at times. And the money just comes in chunks. It's like every now and then you're thinking you're never gonna make any money, or you can't hit the side of the barn, even if you were inside the barn, right? And then all of a sudden, one of these big winners comes along. So this is Riot, was recommended recently. Entry of 7, stop at 575, IPT of 825, a risk of 125. Do the math on all that, which is done for you in the spreadsheet. That's 1,600 shares on a 100K account. So you can see it rallied nicely from lows. It pulls back, triggers an entry, kind of trades back and forth a little bit, comes fairly close to that initial profit target. Could have been a little closer for my taste, but I decided to just go ahead and lock and load. A couple things here. One, your real money is in the second loaf of the trade, okay? So you just saw that ARLP, we ended up with, well, I guess you can't count the dividends. So we only made $1,000 in the first loaf. And then there's about $19,000, $18,000 open profits, $1,000 in dividends, soon to be, I think, $1,400 in dividends once we get Wednesday's dividend. So there's a lot of money to be made longer term. But again, like I said earlier, that's where the risk is. So if I'm making a little bit less than $1,000 on the first trade, if I'm making, let's say, $700 to $1,000, then that's okay. I'm not going to get too excited about not getting that full $1,000 in the first loaf. And a couple things, something super volatile like Riot, and you can't see it, but I think the HV is about 115 on this one. Close enough. Don't quote me on that, but it's close enough. It's over 100. I know that. If it moves pretty quickly and gets near that profit target within a few days like it did here, then I don't split hairs. I'm willing to take off some profits a little bit earlier. Now, for mechanical purposes and for reporting purposes on my service, I will not show this as a trade taken off until it hits that IPT. So we add in the Riot trade, and in this case, only 711 on the first loaf. The good news is, not to brag, but I did take it in more than one account, so thank goodness on that. And then when I took a snapshot earlier, it might be a little worse now. When I took a snapshot earlier, it was at 645. So 1356 in new profits this week, literally a few minutes ago. And you can see that drops that number significantly down to 1840. Now, two things here. Like I said earlier, I did miss a $3,000 trade, which would have wiped out that entire loss, okay? And I can't count that. That's not reality. And that's why I've never met an unsuccessful paper trader, okay? But I don't want to digress too far because people would have taken that trade in their mind and not reality. The bottom line is you actually have to go out there and put your hard-earned money on the line and let the chips fall where they may. Anyway, getting back to this, so you can see without that 3K trade, if this turns into a nice winner, this number is going to look a lot better down here, and this will get back into black. I mean, we can hope, right? If this turns into a 20K winner like the ARLP, knock on wood, then we could end up with a nice little trade here. So I think longer term, we're going to catch enough winners to make it all worthwhile, but I can't not, is that a double negative? I cannot say that I won't have a sleepless night or two concerned about it. Well, that's all I want to cover for this week, and I'm almost out of time, so let's go ahead and wrap it up here. We'll come back to some of the other things that we had started a few weeks back. If you need to reach me, DaveLeonard.com/StockCharts. Again, I'll give you enough stuff to keep you busy for a long time, including all 3 of my books in PDF format. If you need to contact me, DaveLeonard.com/contact. I answer all emails. I guess I should add the word eventually. I do have about 20,000 unanswered. But I have been working harder in more recent times, especially if it's somebody new, to get them to talk to them if you need some help or whatever. So, DaveLeonard.com/contact. I want to thank everybody for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.